We now move to the next segment, one that takes us back to the very foundation of the forum, IGIF, India Green Investment Forum, and how that came into being. Until 2022, as touched upon by the previous fireside chat and the panel discussion, India's climate investment narrative was largely centered around large-scale infrastructure and mobility. To broaden this lens, the Impact Investors Council and the Climate Policy Initiative jointly conceptualized a report that identified emerging climate investment sectors and helped shift the focus towards early stage innovation. The first edition of the Green Investment Opportunities in India report became the cornerstone for launching this very platform, the India Green Investment Forum. And fast forward to 2025, we now have the second edition of the flagship report with us, with a sharper focus on the evolving dynamics of India's green finance landscape. I would now like to take a moment to extend our gratitude to our partners at the Climate Policy Initiative, Mr. Vivek Sen, Ms. Neha Khanna, and Mr. Kalpesh Gada, for their continued collaboration, leadership, and commitment to strengthening India's climate finance ecosystem. And it is now my pleasure to invite on stage Ms. Neha Khanna, Associate Director at the Climate Policy Initiative, to share her insights on India's evolving climate investment ecosystems, its priorities, and the road ahead to build scale. Thank you, and welcome, Neha.
Good morning, everyone. Very mindful that I'm following three great opening acts and also standing in between you and the coffee break. So going to keep it as short as possible and then hand over the stage to the stars of the report. But before I begin, we heard great stuff about mitigation, adaptation, brilliantly timed because the financing adaptation report globally came out talking about private finance and how the money is not enough. We keep hearing the money is not enough, but we hear that there is capital. We keep hearing there is no pipeline, but we keep hearing and borrowers come and say we don't see the money. So where do we stand? The thing is that collaboration is the heart of everything that can happen. And this forum provides an excellent opportunity for that. But getting back to the green investment bit, we have actually seen investments increase. Let's not label them mitigation adaptation, let's just label them good investments with strong impact. And if we just look at that lens, the numbers have grown exponentially in the last 6 years. Since we have started tracking finance flows, we have seen that the capital has actually grown by nearly 100%. Which speaks volumes into what the market believes that the growth story lies. How do we then shift the conversation from, and this is an endeavor that we started with Impact Investors Council 3 years ago now. The report was out in 23, but the talk started in 22. How do we then shift the narrative and how do we get people to start believing the growth story, not just at the highest levels, but also at the lowest levels? How do we get this story across the narrative from grant to senior debt? How do we talk a language which the capital stack providers understand and also the entrepreneurs understand? And so this report came into being, which said that, yes, we talk mitigation adaptation, but let's just put that on the side for a moment and let's look at sectors and subsectors. Let's look at technologies. Let's look at areas which can mobilize capital, because there is a follow-on concept in the market. If you can show success in X, it will scale up. If you can get money to grow into, let's say, renewable energy, which we did. And now renewable energy is absolutely investable. Large scale, before people say DRE is still a challenge, large scale renewable energy, but the basic concept being that there are sectors, there are subsectors, there are areas where technology, while not fully mature, has still yet reached a stage where investments are going to yield results, not only on the financial side, but also on the impact side, where the principles of do no significant harm aren't just principles, but actually actioned upon on the ground in projects, where we take communities along and where we not only say we've achieved 100x or 20x or 5x of investment returns, which is critically important for any financiers, as you've heard, and you will continue to hear for the next 2 days, but also where change has been made, where lives have been impacted, and hopefully we have maybe not stopped the 1.5 from being breached, but hopefully we don't cross the 3 from happening. And on that note, I will thank once again everyone in the room and hand it over back to IIC.
Thank you, Neha, for those compelling insights and for walking us through how India's climate ecosystem continues to evolve and mature. Before we let you go, we would now like to invite Mr. Girish and Ms. Ranjana from Impact Investors Council, and Ms. Neha, Mr. Kalpesh, and Mr. Starthak from the Climate Policy Initiative for the official launch of the report. Please look for the file. The report, Green Investment Opportunities Report 2025 update, has now been officially released. You would have received a notification from Brella, our networking event app, from which you can access the report. Alternatively, there's a QR code at the back of your lanyards from which you can directly access the publications page of the Impact Investors Council. Now, I would like to hand it over to my colleague, Divya Jain, Head of Research at IIC, to walk us through some of the key learnings and highlights of the report.
Good morning, everyone. Thank you, Girish, Ranjana, Kalpesh, Sarthak, and Neha for launching the report. It's wonderful to see a strong representation from across the climate finance and investment landscape, investment ecosystem, as we uncover the findings of the report. Through this report and convening, what we are trying to do is not only map capital flows, but also to highlight the emerging sectors, as Neha mentioned, which are climate smart agriculture, energy transition, circular economy, heat resilience. It not only examines the financing mechanisms and partnerships that are helping de-risk innovation and generate measurable outcomes on the ground, but we are also trying to identify that which are the next set of themes or upcoming innovations or technologies within the climate space that need capital inflow. By 2030, India's green finance requirement is expected to rise to around USD 2.5 trillion, with only about 1/3 of this being met currently. It shows the growing gap that there is a huge gap, that the magnitude of challenge and potential depth of opportunity that we are seeing ahead. We are also seeing a fundamental shift in how corporates perceive sustainability. No longer decarbonization and climate resilience are their peripheral goals. They are becoming business imperatives. Companies are increasingly embedding climate risk and transition planning into their core investments as well as operational strategies. In the parallelly, India's regulatory ecosystem, led by RBI, SEBI, IFSC, Ministry of Environment, are steadily building the enabling architecture that is required to integrate climate considerations into mainstream finance. This is through taxonomies, new taxonomies, disclosure standards, or the incentives for sustainable finance innovation. Therefore, the update or the report that we have just launched is tracking the new opportunities, the practical shifts, and the next wave of investable themes emerging. These are through 4 major drivers. First is the technology evolution, be it through green hydrogen or battery recycling. Growing industry interest as investors and corporates seek scalable and high impact opportunities through policy and regulatory push by shaping the sectoral priorities and risk frameworks, and through financial innovation, either through the blended structures, green bonds, transition finance mechanisms. If, as Neha also mentioned, if we look at the climate tech investments, the growth trajectory is striking. Through this report, we have tracked investments. We have tracked investments from Jan 2020 to mid-May. And we can see that in 2022 alone, the climate tech represented 1.2 billion of total green investments. By 2024, that figure had almost tripled. And by mid-25, we have already reached around USD 4.7 billion, projected to cross 5.5 billion by year end. This reflects both strong investor confidence and a mainstreaming of sustainability-linked investment themes. Also, sustainable mobility, as we all know, continues to command the largest share of flows, while climate-smart agri is attracting rising investor interest from farmer-first models that combine productivity with adaptation. We are also seeing fresh capital that is being directed towards new themes, such as water efficiency, sustainable cooling, and circular economy innovations. This indicates that there is growing maturity, there is growing diversification of India's green investment ecosystem. Broadly, this shift is threefold, from mitigation only to resilience inclusive approaches, from pilots to scale and market integration, and towards a more diverse and connected ecosystem. Through all this, we see that there is policy, technology, capital, and scale that all reinforce one another. This data therefore highlights that climate tech is no longer a niche. It's a central pillar of the India's impact investment landscape. With this, I now hand over to Megha to take over the thematic deep dives.
Thank you so much, Divya. So, our report explores the themes displayed on the slide over here, and I'd like to take a moment to talk a little bit about how we went about identifying these themes and what really guided our approach. We began by looking beyond a strict set of sectors, and this exercise is approached through the lens of themes and solution areas, ones that reflect climate mitigation potential, elements of adaptation and resilience, and other co-benefits. We also examined where investments are currently flowing, looking at equity and debt deals as well, and engaged with a range of stakeholders, including climate-focused investors and ecosystem actors. These conversations helped us corroborate our research and build a deeper understanding of how India's green investment landscape is evolving, particularly as newer technologies mature and as policy and investor focus expands into adaptation and resilience areas as well. Building on the 2023 report, which was our previous edition, our approach was guided by keeping what remains relevant, such as sectors like battery energy storage systems, green hydrogen, and climate-smart agriculture, which were there last time as well as they are there this time as well, adding what's new and consciously not going too deep into areas such as large-scale renewables and electric mobility, which, while we acknowledge are very relevant and dynamic, but already are relatively more mature and maturing, and we wanted to keep our focus more on the emerging sectors. Distilling the broad areas identified, we chose opportunity areas that we explored in the 2025 update. Under energy and feedstock transformation, we looked at battery energy storage systems and green hydrogen, both areas with growing policy support, market activity, and very promising project pipelines. In food, agriculture, and livestock, our focus was on climate-smart agriculture, an area where innovative, farmer-first business models are emerging, offering rich co-benefits with adaptation and resilience as well. For the waste and circular economy theme, we focus on lithium-ion battery recycling, given the increase in lithium-ion battery applications across EV, battery energy storage systems, and in the recent years, and the potential for a growing recycling ecosystem, especially in the context of critical mineral recovery. Two new themes that stand out this time and have emerged strongly in this particular edition are water and heat resilience and sustainable cooling. Water is a complex but rapidly evolving adaptation investment area. We explored opportunities in water generation and quality, access and efficiency, and wastewater treatment and management. There's growing innovation in the space, with startups developing wastewater management solutions, and there are also IoT-based monitoring solutions emerging. And water as a service business models is also something that we have seen come up. The next area, heat resilience and cooling, focuses a little more on sustainable cooling part of it, which is a space offering both very strong adaptation benefits as well as significant mitigation potential through low carbon cooling solutions and especially low GWP refrigerants and other technologies. Each of these themes carries its own nuances with opportunities that span across the mitigation, adaptation, resilient, co-benefit spectrum. Furthermore, each theme in itself presents a range of investment opportunities across the capital stack, from early stage and non-dilutive capital to commercial capital for more mature solutions. I would now like to hand the dais over to Divya Pinge to share some more insights from our report on the way forward. Thank you.
Thank you, Megha. Good morning to all of you. Like Megha just said, each of the sectors that you see on the screen have some nuances which have formed the basis for the investment opportunities that they showcase. Having said that, through the conversations that we had with stakeholders and the research that we carried out, there were also some general observations which stood out for us, which can form the basis of how to approach green as an investment opportunity. The first aspect that stood out in most of the conversations was that green is no longer an incidental lens, but a very strategic approach of looking at investments. And since there's been so much of a conversation around the mitigation and the adaptation lens, while mitigation continues to stand strong, there are pockets of opportunities which investors are willing to explore in the ANR space. Deep tech, another increasing area of interest for investors, especially given the policy push and the ability to marry this space with what climate tech really requires. From our point of view, there were a few considerations which investors, while forming a thesis, could actually take forward with them. The first one being a very intentional approach, a very conscious approach to deploy early stage, possibly non-dilutive capital into early stage technologies, especially those which are looking to address some of the very critical challenges of each of these sectors. A closely aligned point is the marrying of corporate and industry and academia, so that technologies which are being developed are not done so in isolation or just technology superiority, but also their ability to be adopted practically on ground. Linked to this is the necessity, some of which our panelists also addressed earlier, is the importance of thematic or sector-focused funds. Green or climate no longer being a large monolith, a behemoth which has to be having a generalist approach, but how can we look at each of these themes as ones meriting their individual investment thesis? And possibly the role of the corporate transitioning from that of a user of solutions to an investor in solutions, which tomorrow can pave the way for decarbonizing their own supply chains. A lot of these activities are happening already. What we would really like to stress upon is the opportunity that is emerging for a lot more of these interventions to take place. And needless to say, for that to happen, the imperative for patient capital, sector-aligned capital across the stack, right from grant to equity to debt, and possibly looking at merging or blending all of them. And lastly, something interesting that stood out for us from the conversations was about how investors, while carrying out their own underwriting and their thesis, also put into mind the considerations given to policy guidelines and compliances, so that the enterprises which they invest in are not done so from a short or a mid-term potential, but from their ability to actually be adopted holistically by the market without diluting any of the compliance requirements. While these are some of the learnings that we take with us, there are going to be a lot more that are going to come up in the panel discussions to follow. These points which you see on screen are probably the basis which we would like to delve more into the discussions today and tomorrow. With the energy and the feedstock transformation, the policy push has been immense. The project pipelines developing have been at scale. What is really now required is to deploy capital into innovative technologies ranging right from electrolyzer manufacturing to alternative battery chemistries to battery management systems, basically a plethora of hardware and software solutions. Closely linked is lithium-ion battery recycling. As the battery demand increases, the waste problem also surmounts, bringing with it an opportunity to deploy capital across the stack in not just building recycling technologies, but also investing in supply chains which are scalable, sustainable, and circular. Climate smart agriculture, as so many of us have heard already, continues to attract investor interest. What has been interesting has been the transformation or the depth and the scope of solutions that are getting activity from investors here. Right from precision ag to agri-biotech to post-harvest storage and preservation, and including newer themes like soil carbon capture. Especially a place that we'd like to highlight for domestic capital to play a strong role, especially given their understanding of the regional nuances and complexities that agriculture presents in India. And lastly, a new theme this time in the report, sustainable cooling. Immense policy push, a rising heat challenge in India, and an ability to deploy solutions with multiple applications right from consumer to commercial and industrial. There has been activity and interest from investors who have been putting up sector-focused funds for cooling with an interest in different solutions right from cold storage to space cooling. These were some of the snippets which we hope to dive deeper into the sessions that are going to happen today and tomorrow. The report is obviously going to give you a deep dive into this, and we hope that you find all the insights that we have shared today relevant. What you see here is the QR code. Please feel free to scan it and download it. On behalf of the IIC and the CPI teams, we hope and we look forward to your feedback and your reflections on the topics that we've shared here, and wish you all a very, very productive IGIF 2025. Thank you.